Welcome to our weekly roundup of key business developments in Sri Lanka. I'm Nishani Pigera. Let's first take a look at the main stories for this week. World Bank doubles growth forecast for Sri Lanka. CSE nears a one-year high. And tax revenues up 41% in the first 8 months. Let's take a look at our top story for the week. The World Bank doubled Sri Lanka's 2024 growth forecast to 4.4% from the 2.2% in April as the bank announced that the Sri Lankan economy has stabilized. The economy has grown for the last 4 quarters, supported by a strong industrial and tourism sector. The bank also noted that Sri Lanka has an expanding untapped annual export potential of $10 billion, which could turn the trade account into a surplus and create an additional 142,000 jobs. However, the World Bank expects poverty levels to stay above 20% till 2026. Just last month, Sri Lanka concluded its external debt restructuring with the bondholder group, which agreed to exchange existing bonds for new bonds with principal repayments starting from 2028, which has paved the way for Sri Lanka to continue its recovery well into 2025 and 2026. The all-share price index at the Colombo Stock Exchange continued its bullish trend into the 4th consecutive week, following the presidential elections, gaining nearly 1,200 points. The index is now near the one-year high point of 12,500, last seen in May this year, making it a critical area to cross. Following the completion of the external debt restructure, potential foreign inflows and a rating upgrade could further boost momentum. Further, Sampath Bank recently participated in a $750 million loan facility for the State Bank of India, where it contributed $25 million in a bid to diversify its investment portfolio. Sri Lanka's tax revenues in the first 8 months rose to 2.3 trillion rupees, up 41% from a year earlier. Meanwhile, current spending rose only 3% to 3 trillion rupees from a lower than budgeted interest bill. Earlier this week, President Anurakumara Dissanayake announced fuel subsidies to fishermen and farmers with an immediate additional interim allowance of 3,000 rupees to be paid to all pensioners, for which 2 billion rupees has been allocated. Further, next year, state sector workers are also expected to get a wage hike to ease the cost of living burden. Under the IMF program, Sri Lanka is expected to maintain a primary balance of 2.3% while maintaining government revenues at 15% of GDP. The current administration is expected to meet with the IMF at the end of the month to discuss alternatives to reduce the tax burden on the people of the country. Worker remittances in September was a significant $556 million, bringing the year-to-date inflows to over $4.8 billion. Strong growth in worker remittances is bringing the much-needed dollar inflows to the economy, helping to reduce the balance of payment deficit. Currently, Sri Lanka's foreign reserves stand at around $6 billion, covering just over 3 months of imports. In a bid to strengthen the local pharmaceutical industry, the State Pharmaceutical Corporation will enter into buyback agreements with 49 shortlisted manufacturers to supply 454 essential drugs to the national supply. The initiative is a part of the government's vision to increase the local production of medicines from the current 20% to 40%, reducing reliance on imports. The government will purchase such essential drugs from suppliers for a period of 10 years at reasonable prices. The Sri Lankan government announced that it has abandoned plans to sell the debt-ridden Sri Lankan Airlines, but will restructure it to run profitably. As of fiscal year 2024, the airline had a debt burden of around $1.2 billion and accumulated losses of 592 billion rupees, although it turned a profit during the period, the first time in 18 years. According to Sarath Ganegoda, Sri Lankan Airlines chairman, the airline is responsible for 50% of the tourist traffic into the country. In our weekly tourism update, in the first 15 days of October, over 63,000 tourists arrived in the country, bringing the year-to-date total to over 1.5 million. Daily arrivals continue to trend lower, rising to 4,233 in the month, up from the 4,071 recorded in September. India continues to be the primary source market, followed by China and the United Kingdom. At the Treasury Bill auction held on Tuesday, yields on all maturities fell for the 3rd consecutive week. Bids amounting to 253 billion rupees were received, of which 97 billion were accepted. The Sri Lankan rupee depreciated against the dollar this week, with the central bank's indicative mid-spot rate ranging around 292 to 294 rupees. So far this year, the rupee has appreciated over 9.5% against the dollar. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for regular updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.